Hello traders, I'm Shlomo Cooper coming to you directly from Wall Street, and this is the video ahead of the opening bell for the week of 12th of January 2015. US stocks dropped on Friday, and this is the daily chart of the SPY, the ETF that tracks the S&P 500. Here we see it on the daily chart, on the weekly chart, on the 30 minutes chart, and on the 5 minutes chart, and this is a red ugly bar. Actually, the benchmark pulled back into the red for the year as the December jobs report topped expectations, but hourly earnings declined. More of that, investors tracked events in France after Wednesday's and Friday's massacre in Paris. The S&P 500 ended off its first full trading week for 2015 down 0.7%, and this is the matrix we see for all the major assets. I'm tracking. Here's the S&P 500, the SPY, weekly minus 0.7%. We can also see that the USO, this is the oil we are going to discuss in a short time, declining almost 8%. From the start of the year, it's down more than 10%, while the UUP, the dollar index, continuing its upwards march in 2015, up for the last week almost 0.88%, and from the start of 2015 up almost 2%, a great march on the dollar index. The real story though was the volatility. The stock market changed its color like a chameleon throughout the week, first seeing a sharp downward plunge on Monday and on Tuesday, only to be swept higher by a strong upwards surge on Wednesday and on Thursday. Volatility is at a high, and this is the time for all investors to return back to the basics, to time-tested trading principles, because mistakes in a volatile movement can demand their toll, and it can be an expensive fine to pay. So where is the market heading this coming week? Everything is open. Pay ahead to the 50-period moving average. This is the green line on my daily chart. The market has just tried to go above this line and was and got support there on a Friday, on Friday's low. A decline beneath it, and the 198 point level on the SPY could be tested again. It was tested. That was the low for December, and pay attention that during last week, the low of last week was a couple of cents above the last low, so we can see here a tiny a tiny higher low, which is a positive outcome, of course. Also, if the spike is going to get a support on the 50 moving average, that means we could already see new highs this coming week. The SPY will need to go up back to 208.77, the yearly high of 2014. On the weekly chart, there is nothing new. This is a very steady climb on the chart throughout all the recent years, both 2013 and 2014. It's climbing above all its moving averages, and as we can see, this is the 20 weekly moving average just gave support for the market, and on the weekly chart we have a doji bar with a bottoming tail. This is a positive issue. On the 30 minutes time frame, this is the declining 5 days moving average, and actually you need to set your moving average on the 30 minutes chart to 65 periods in order to see the 5 days moving average. And this is, you know, my best indicator for short term when I'm day trading, and below this moving average the market is guilty till proved otherwise. But when it is trading above this moving average, it in a sense still proved guilty. So right now the market started last week with a decline 2 days, Monday and Tuesday, below the 5 days moving average, but it succeeded to go over it on Thursday. And then although we had a decline on Friday, it still, or the trading day was above this this average, so moving average. So the best outcome would be if the market can test the zone of 203 early this week, and then to get a support and bounce back to higher levels. Let's move on to the XRT. The XRT is the ETF that tracks the retail, and extra attention should be given this week to retail stocks with the sector's annual ICR exchange conference that opens today in Orlando, Florida. And I like the sector. Just take a look on the daily ETF chart, a very nice chart on the XRT, also on the weekly chart. This is the pattern of higher highs and higher lows, and this is exactly what I'm looking to see when I'm choosing assets to trade. Investors hope the lower gasoline cost is putting more money in consumers' wallet for spending on apparel and other retail goods, and the next 2 weeks will indicate whether that's happening. Let's take a look on a couple of the most bullish stocks on this area, on this space. Lululemon, LU climbing on Thursday to a new all-time highs. Also looks great on the weekly chart, a very steady steady climb since the low of 2014, and also a very nice climb on the 30 minutes chart. Let's take a look on URBN, Urban Outfitters. URBN also, it has just cleared the declining 200 moving average, and with a gap up on Thursday. And as long as this stock can hang on above this line, this is a positive circumstance for the buyers on this chart. Just take a look on the weekly chart, a very nice bullish engulfing Japanese candlesticks. Also, that implies us there is going to be probably this week another push up in this stock. Let's take a look on UA. UA is Under Armour, a little bit struggling, going sideways throughout the last months, but on the weekly chart it's just trying to hold on around the 20 moving average on the weekly chart. And last one is Nike, which I like on this sector, NKE, also going sideways a little bit during December and the first week of 2015. But what you can say, this is just an amazing chart on the weekly chart, a very steady climb on the weekly chart, and it's just waiting for the bulls to take charge here and to push this stock higher. The coming weeks, as the fourth quarter earnings season gets underway, are among the more active periods of the year for retailers to issue earnings pre-announcements, and the fourth quarter includes the crucial holiday shopping season, and this is why it's so important to look and to put these stocks on your screen when you are trading this week. Let's go to the crude oil, and crude oil decline has also caused a consternation that lower prices are a sign of weaker demand due the global economy grinding to a halt. Just as the dollar picked up 2015, right where 2014 left off, and we saw it in the previous slide. The UUP, the ETF that tracks the dollar index, is pushing higher again early 2015. Also the crude oil, so did the crude oil on Friday. The crude oil futures were already down 10.2% in 2015, on top of 2014's 46% decline. And you know, so what you can say, we should just keep away from the crude oil. It's just keep declining, and you know, as I say, on every asset, on every financial asset, it can go to zero. So of course the crude oil is not going to go to zero, but you cannot signal where a bottom is, and certainly there is no bottom in sight till now. Back to Wall Street, let's take a look on Alcoa, AA. Alcoa, and you know, it's going to be not only a busy week for economic data, more importantly, earnings season kicks off today on Monday, when Alcoa reports after the close, and I'll be watching the fourth quarter results for signs that the company's business providing specialized products for the aerospace and automotive industries continues to grow. Also, this is a great case to learn and see what effect falling oil prices have had on Alcoa's business. Lower energy prices mean lower costs for Alcoa, but could mean lower demand for its products in the automotive industry. Right now, it's on the daily chart, Alcoa is struggling around the 200 moving average, but if it can hold on these levels, then there is a bright spot at a bright light at the end of the tunnel, because on the weekly chart, this is a great chart. Look how nice this stock is just climbing. It's right now trying to get its feet above the 20 moving average, but you know, from the start of 2014 it started around $10. Right now it's at around $16. This is a 60% gains. This is huge, and we are talking about Alcoa, a very heavy stock in Wall Street. Let's take a look on earnings next week, and first of all on earnings reports by day. As shown on this chart, it won't be for at least another week before the reporting period really kicks into higher gear. Only around the 22nd of January we have 72 reports on that day, and on the 29th of January we have 177 reporting on this day. And the peak of earnings season won't be underway until the end of the month. 207 reports are going to be issued on the 5th of February. Stay tuned. So what companies are going to report this week? And while there aren't a lot of reports next week, there are plenty of key reports to watch for, especially in the financial sector. Beginning on Wednesday, we are going to see the reports from JP Morgan and Wells Fargo. Citigroup and Bank of America are going to issue their reports for investors on the 15th of January. This is going to take place on Thursday, and Goldman Sachs and Schwab are going to close the week for the financial on Friday. Outside of financials, other big names reporting include KBH, KB Home tomorrow on Tuesday. We have also Lennar, LEN from the housing sector. Where is LEN? Here it is, on Thursday. And then we have Intel from the technology on Thursday, Skyworks, SWKS from the semiconductors, and they are going to actually combine all the key reports for this week. So As we approach earnings season, it is important to remember that individual stock volatility picks up for all stocks on the day they report, and this is why we are so attracted to these kind of stocks as traders. So here's a list of the most volatile 25 of those names, and as shown, Groupon GRPN is at the top of the list with an average one-day move of 17.94% in reaction to earnings. That's a move of nearly 20% to the upside or downside following each quarter. Granted, it is a single-digit priced stock, only $8.11, but that still works out to nearly $1.5 on the day. Let's take a look on the chart of Groupon GRPN. And as you can see, this is a boring stock, nothing for us to day trade because the volatility is very, very low. But yes, we do have 4 times a year to trade Groupon, and that's going to be on the days of its report. While Groupon is a low price stock, there are also 2 triple-digit priced stocks, Netflix and FLX, which is trading for $331 per share, and also we have GMCR. Where is GMCR? Here is GMCR, priced at $136 per share. Also, we have on the list 1 4-digit price stocks. This is PCLN, Priceline, for $1,072, and based on their share price, and as you can see, these stocks can also move sharply. For example, PCLN, although this is an expensive stock on average it's going up or down more than 12% on its daily reports. By the way, based on the share prices, the average daily move in dollar terms for these stocks is $18 for GMCR. That means around $49 for NFLX on a daily daily movement we are talking about, and $129 on Priceline on its report date. And of course, this is why day traders so like these kind of stocks when it comes to the earnings season, and the earnings season is really a celebration for traders. Let's go and see my weekly stock picks for this week, and I chose for this week 1 for long and 1 for short. CRZO. This is coming from the energy. It's just hanging just below a prior resistance from 2014, and should it can leap over this resistance above 43.05, I believe it can surge up. SGN on the flip side, it's going downwards, and we have here a very, very nice inverted cup and handle if it's going to break the support of 2014, and as you can see, there are a couple of points around this support. It's going to be a major breakdown, and this is why I want to trade SGN for short below 30.50. As always, have a great trading week, and don't forget to come and visit me daily on my Facebook page with daily up-to-date commentary and the hot stocks list for every day. Search for Shlomo Cooper Trading and become a member in my Facebook page.